Hey, this is Matt from InvestiQuant. Today is Monday, March 29, 2021. And this morning, the markets gapped down following Friday's strong rally on the session. And since then, after an initial test lower, we have started holding higher prices. We're holding above the open. We're holding in the top half of the intraday range in 3 of the 4 instruments. And the Russell is the only one that is not true for. The Russell is this top right chart. But we've got the S&P up here in top left. That pattern is holding out true there, as is in the NASDAQ in the bottom left and the Dow in the bottom right chart. So what we're going to do this afternoon is take a look at holding that type of strength following a gap down that's on the heels of a large rally. So let me set that up in Discover. I'll show you how I'm doing it, and then we can take a look at the results. The entry will be based upon entering the market long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, this morning, we opened lower on the session, so I'm hopping into the opening filters library and clicking on gap down for the gap direction. And then I'm going to go into the post-open filters, and I'm going to put a little bit of description around the price action that we're seeing right now. And to do that, I'm simply going to say we are trading above the opening print, so I'm hitting equals next to close above open, and that means that the price as of the time of the entry, that's referred to as the close for this, at 3 p.m. is above the opening print. So that's currently true. It's not 3 o'clock right now, so I don't know that it'll be true then, but currently that is true. Then I'm also going to say that we're trading in the top half of the range. So if I just go down just a few more options to close in the top half of the intraday range, that's going to mean that the 3 p.m. price is in the top half of the range. So I've got both of those added to this test. Next, I'm going to go into the price patterns library. I'm going to grab that unique move that we looked at this morning, the largest rally in 10 days. I'm going to hit equals to add that from the unique moves. I can also grab it from the active today section. And then lastly, I'm going to put it in a similar market environment above a 10, above a 200-day simple moving average, and click view results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you're trading above the open and in the top half of the intraday range at 3 p.m. This is coming after the largest rally of the past 10 sessions, and that is measured from a close-to-close move. I've also included the filter that it did open lower on the session, and then in the backdrop of a bullish market environment above a 10, above a 200-day simple moving average. Historically, 57 samples have taken place in the S&P dating back to 2003. We've got 54 in the NASDAQ, 47 in the Dow, 39 in the Russell. The win rates on these are all a little weak. So you've got the S&P coming in at 46%, the NASDAQ 43%, the Dow is the weakest of the group, 36%, the Russell 44%. So all of them have been weaker than 50%, and the Dow has been the weakest at 36%. As far as average win, average loss goes, the size of the moves, they're fairly similar in size for the S&P. The loss has been bigger on average in the NASDAQ. That is true for the Dow as well. The average loss there quite a bit larger than the average win. And then the average win and average loss is fairly similar in size for the Russell. So 2 of the 4 have larger average losses compared to the average win. The other 2, technically, yes, they are larger. They're just fairly similar in size, so they're not as skewed as the others. But all 4 are a little bit weak historically, approaching the close with this pattern. So hopefully you found this helpful. Good luck the rest of the day, and we will see you next time.